over the course of 1,000 years, it's quite obvious, right? The miners are paid by transaction fees. The block rewards were a bootstrap or an initial subsidy in the first 20 years of the network. But as far as I can see, by the year 2035, the block rewards just look de minimis. So 1% of all the Bitcoin comes out over 100 years after that. So block rewards don't really matter. They fall away over the long time toward infinity. What matters is transaction revenues. And over time, I think we can expect the transaction revenues will grow to far outstrip the block rewards. And then if you look at Bitcoin miners, they're really Bitcoin power producers or digital power centers that are defending the network. They're the first line of defense in the network in the sense that anybody that wants to hack or interrupt the blocks in the next 10 minutes, they have to get through that hash wall. They're also the second line of defense of the network because the Bitcoin miners all have invested millions or tens of millions or 100 millions or billions of capital that they can't recoup in less than 4 to 8 years and perhaps longer in some cases. So because they have to recoup their capital investment, they form corporate entities in every single nation state and every jurisdiction, and then they become active, engaged lobbyists for pro-Bitcoin policies everywhere on Earth where they operate. So you really could think of the Bitcoin miners, kind of as all of the citadels on the wall that are defending what is Bitcoin, and they are in essence the defense arm of Bitcoin in the short term and the midterm. So that being the case, once you accept the fact that you've got these three protocols, and then you ask yourself, well, how should I look at the network and proposals to change the protocols? Well, I think there are a lot of models you can adopt. One is the New York model. The New York model is New York City is sitting on top of Granite for 200 million years. So Bitcoin is the Granite. Bitcoin is 21 million blocks of granite underneath New York City. Now, over the course of thousands of years, you've got different nation states. You had 100 Indian tribes. Then you had the Dutch. Then you had the British. Then you had the New York colony. Then you had the United States. And 1,000 years from now, you may have another nation state on Manhattan. But here's what changes, right? The granite doesn't change, but the roads and the sewers and the city layout changes, and the parks change, and the buildings change, and the people come and go, and the politicians come and go, and the rules and the political regimes come and go, and the businesses come and go, and customs and fads come and go, and markets come and go. And those are all the things that you can build on the islet of Manhattan because you have the granite. And so if you look at it that way, you start to think, well, Bitcoin is layer one. It's the granite. What's important is I need to know it's going to be here in 1 million years. That's what at the very least, I build a building. I need to know it's going to be here in 100 years. But if you told someone, my building's good for 100 years, well, 50 years from now, they're not going to want to buy the building from you. You really want to know the land that the building is built on is good for 1,000 years. If I forecast a sinkhole in the middle of an acre of Manhattan in 37 years, it wreaks havoc with the economy, in that jurisdiction.
Hey, Money Talkers, we bring you the hottest crypto scoop. Smash that like button, subscribe, and guess who's making Santa jealous this Christmas? MicroStrategy. They're not decking the halls, they're stacking more Bitcoins. MicroStrategy, led by the Bitcoin maestro Michael Saylor, just dropped a crypto bomb. They splurged $615.7 million to snatch up an additional 14,620 Bitcoins. Saylor spilled the tea, saying they snagged this batch at an average of $42,110 per Bitcoin. That's what I call a Christmas shopping spree. MicroStrategy shares are moonwalking faster than their Bitcoin stash. The premium at which these shares are trading to the Bitcoin value is sky high. We're talking a whopping 36%. It's like buying a limited edition Santa hat. You pay a bit more, but you stand out in the crowd. Well, it's all about scarcity and safety. MicroStrategy isn't just a crypto player, it's a software wizard. With less than 15% of its value in the software game, investors see it as a safe bet. When the crypto seas get choppy, MicroStrategy's ship stays steady. MicroStrategy's Bitcoin adventure is heating up the winter. Will their stock keep dancing on the Bitcoin beat, or are we in for a surprise twist? Now, let's continue our discussion with Michael Saylor.
It's very important that you have that kind of outlook and stability. The layer 2s, the layer 3s, the layer 4s, and the layer 5s, and the layer 6s can all have very high frequency evolution. And there's not that much to risk. Whether Lightning and open permissionless layer 2 will compete with other open permissionless layer 2s. You can have competition. We don't have to agree on which one is the right one. You can have layer 3s. You can have Bitcoin moving from Cash App to Coinbase, across somebody else's mobile app, and the layer 3s can come and go. You can have layer 4s and layer 5s, applications and services and derivatives. You can have this ETF, and it can be replaced by that ETF. They can come and go as well. And then there'll be people that will actually create derivatives of derivatives. I've got an ETF, I trade options on it, and then I create an ETF to trade the options on the ETF. And, you could think, well, these are stupid things, right? And maybe they are, right? Art in New York City will come and go. The art of 1700 is different than the art of 1000 BC, is different than the art of 2000 AD. I mean, they'll change all these things. So if you look at Bitcoin, all these things on the Bitcoin base layer, whether it's art or property or applications or Lightning channels and layer 2, all of these things are going to change with what's going to look like a very high frequency. If you were a creature and your lifespan was 10,000 years, think about how you would perceive Bitcoin and all these things that people are doing on Twitter and talking about and developing. You would blink every 10 years and then another 10 years go by and your view would be very different. And in that particular case, you would have a good feeling of Granite underneath Manhattan, Everything else would change, and then you would think these mere mortals are debating, this and that. Like Gramercy Park, the use of it, that's been significant for 100 years, but over 1,000 years, insignificant. And so I think that the New York model is kind of helpful. I think that if you take another view of a protocol that's helpful, Bitcoin is our universal rational economic protocol. Well, English, math, fire, electricity, and gold, those are 5 other protocols. English is a protocol that, has been around about 1,000 years. It's changed a bit. There's a lot of debates, but for example, there are certain things you can't say with the English language in certain countries, and yet we speak English, right? So your 3-year-old probably can't use the English language the way you use the English language. And if you were in a court, you wouldn't use the English language the same way. And if you were in a foreign country, you might not use the language the same way. So the protocol will be used many different ways. But at the end of the day, the threat to the protocol is to redefine the word good to be bad and redefine the word bad to be good. And that starts to create chaos, right? And I think, if you look at math, it's a similar thing. Like base 10 math is a very specific protocol. We didn't always have it the way that we use math. And certainly base 10 math isn't that old, but it's used across nationalities. Good people use it. Evil people use it. People debate how to use it. Some people are really good at using it. Some people are awful at using it. And yet the protocol contributes something of value to the human race. And civilization benefits from having that protocol.
Grayscale Investments has adopted the cash creation model instead of the in-kind model for its proposed spot Bitcoin exchange-traded fund, ETF. However, the crypto asset manager warned of adverse consequences. A spot commodity exchange-traded product that only employs cash creations and redemptions and does not permit in-kind creations and redemptions is a novel product that has not been tested and could be impacted by any resulting operational inefficiencies, the firm's filing with the U.S. Securities and Exchange Commission, SEC, details. The U.S. Securities and Exchange Commission's former head of Internet Enforcement has warned that spot Bitcoin exchange-traded funds, ETFs, will create yet another Wall Street fee-sucking investor scam of epic proportions. In addition, he stressed that it will likely be the most centralized crypto contraption conceivable. Hong Kong's financial regulator has published rules for spot Bitcoin exchange-traded fund, ETF issuers, allowing the use of both cash and in-kind creation models. This approach contrasts with the U.S. Securities and Exchange Commission, SEC, which insists on the exclusive use of the cash creation model for spot Bitcoin ETFs. The CEO of KyberSwap, the decentralized finance aggregator, revealed on Christmas Day that the platform recently laid off 50% of its workforce. The CEO added his organization is in the process of creating a voluntary database that is expected to help these workers secure new jobs in the Web3 space. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.